The only decisions you're trying to make now, if you're marketing their home, is how do we get the most number of buyers through this property? And advertising this feature is a way to do that. And ultimately, that may be your best buyer. So you don't want to rule them out before you've gotten down that path.
Let's make it happen. Bethany, Mike, where are you guys located? City, state?
So we're in Alexandria, Virginia, which is just
Oh,
outside of Washington, D.C. by about 15 minutes.
yeah, I love that area.
Yeah,
Nice.
it's beautiful. It's not California, but we love it too. There's lots to do here all the
Yeah, but
time.
you guys have all of the history, Every time I go there, I feel like we started late in California. You guys have everything there.
Yep.
So
We do.
it's pretty cool. It's pretty cool. All right, everyone, welcome. We're going to talk to Bethany and Mike about assumable loans. The first time I heard about assumable loans was like a lot into it, I think was right when the interest rates started going up. I'm like, wait a second, what the hell is this? And I've been in business for a very long time. I'm like, I don't know what this is. And so I started diving into it. I called my lender. They explained it to me. I was like, dude, I had no clue. I had no clue. So really quick, please introduce yourselves and tell us how you got into assumable loans.
Sure. So I'm Bethany Stalder, and Mike and I are actually business partners and spouses. So we run a husband and wife real estate team out of Northern Virginia, and we started AssumeList. We'll kind of get into assumable loans first, but we started a company to help people find assumable loans because, like you, we'd heard about them before, because Mike is a veteran, and we'll talk about the connection there in a little bit. But as interest rates started going up, we also started wondering, why isn't it easier for people to find this product? This is hugely beneficial to home buyers and potentially agents in a world of rising rates.
Massive.
So how do we connect more people with this option so that they can hopefully find the right place and save a ton of money in the process? So an assumable loan is essentially a government-backed loan. So think VA loans, FHA loans, USDA loans. And one of the benefits of those products is that a home buyer, when they're purchasing a home with that loan tied to it, they could buy the home and also take over the loan. And where that comes in handy is that whatever monthly payment that loan has, whatever interest rate that home has, and loan balance, the home buyer takes over all those things. So you think about potentially buying a home that was either bought or refinanced between 2019 and 2022. That home buyer that homeowner currently has probably an interest rate of sub 3%. So if you find one of these homes on the market, you as a home buyer, you don't have to try to wait for interest rates to go back down. You can still get that rate today. You just have to do it in a slightly different manner. So you're going to get an assumable loan instead of getting a new loan, essentially.
All right. I like that. That's a great explanation. Thank you for that. Jillian says, what was it? No, Janet says it was popular in the 80s.
Yeah.
And yeah, that makes sense. I could see that, right? The interest rates being so high coming in from lower. That makes a lot of sense. There is a question, and I want to start with this because as soon as I learned about assumable loans, I went into like this hole, and then I started seeing it, people complaining about how difficult it was, right? So I have one person on Facebook, Elaine, says, I'm involved in an assumable loan at the moment. It's a nightmare.
Yeah.
How do we, why is it typically a nightmare, and how do we avoid that?
So let me help answer that question. It's a great question, and there is a lot of negative connotations in some respect when we talk about assumable loans. So we know what the benefits are. I mean, Bethany just walked us through why they're desirable, but then how do you actually take advantage of them? So before we even talk about how to find them, let's talk about how they work. So if you remember back in the 2000s, those of us who've been in the real estate industry for a decade plus will remember the days of the subprime kind of mortgage blow up and the housing crisis 2008 2009, where a lot of homes went underwater and a lot of homeowners ended up selling their homes through short sales.
Yep.
And if you recall those days back in the early 2009, summer 2009, where anybody who needed to sell their home and do a short sale, it was a very, very painful process. And it took months and months to get lenders to approve those short sales. Well, if you kind of fast forward several months later, 6 months, 12 months, 2010, 2011, when there was still a good number of homeowners underwater, but the market was certainly recovering, a lot of agents became specialists in short sales, and they could
Mhm.
close a short sale in 30 days or less. In fact, even some of the lenders who were processing these short sales were, hired more staff. They refined their processes, and ultimately a short sale just became just any other purchase. And so initially it was very painful to do a short sale, and then as systems refined and lenders hired more staff and refined their processes, and agents learned about them and learned how to process them and get them through the system, there's a lot of people that advertise themselves as a short sale expert, and they got a lot of business for that because they knew how to work the system and could get deals closed quickly. That same kind of philosophy applies to assumable loans. We are
Wow.
early in the process where assumable loans, at least up until late last year, were quite painful to execute. In fact, Bethany and I have both closed deals with buyers with assumable loans where it took, on the very quickest end of the spectrum, 60, 75 days. But on the longer end of the spectrum, we had one that took 5 months to close.
Holy
And so
cow.
yeah, so and a lot of agents who are perhaps listening to this recognize the challenges with getting a lender to process and close on that assumable loan. Um, as I just kind of alluded to with what happened with short sales, that is also that progression is also making its way through with assumable loans. And right now, within the last month or so, the VA, so Department of Veteran Affairs, came out with a new circular that directs without question, all assumptions now have to be processed and a determination made inside of 45 days. And failure to do so is what's considered a non-compliance loan. And the VA is effectively stating that they will zero out that government guarantee on that loan until that assumption has been approved. And furthermore, if it's a repeat offender, if there's servicers out there, which I know without naming them by name, there are some servicers who literally will take 3 or 4 or 5 months in the anticipation, the hopes that perhaps that deal falls through and they don't have to process it. And if those are reported back to the VA can actually report that up through the Inspector General, and there's
Mm.
actually civil penalties to include fines and other legal ramifications that these servicers are now going to be imposed or will be imposed upon these servicers if they do not process these VA assumptions within a specific time frame. And that time frame has been
Oh.
defined as no more than 45 days. So
Okay.
there's some teeth now, and the systems are refining themselves, and certainly agents are becoming more familiar with assumptions. And we can talk about strategy and how you can create an offer to make it more beneficial to sellers. We can talk through that. But to address the question is, um, as time progresses, we will certainly see the time frame, the timeline in which assumption loans are processed and approved come down. I think we probably will get to a point where VA assumptions, a 60-day closing will be well within the norms for an assumption here in the next few months is my guess.
Oh, okay. I like that. Where do you feel, or where have you seen the delay? Is it in making sure that the loan is assumable? I would assume that's not the delay.
No,
Is the delay in the difference of what the loan amount is versus the new loan? Is that the big delay?
the delay is the servicer approving the assumption package. So when you, as a buyer, if you're an agent helping a buyer through this, you're going to submit that offer to the seller, and the offer itself will look exactly like any other offer, except instead of applying for a new mortgage with that purchase, the expectation is that you will assume the existing loan. Well, in many cases, depending on the servicer, they may not even assign a loan processor, to begin the assumption process until 30 days after that bank receives the contract.
That's
So,
crazy.
so then now you got to wait 30 days just to get a loan processor, and then they'll begin their underwriting. And then remember, there's no money. I say no money. There's very little money. That actually the federal regulations prohibit servicers collecting money in excess of $300. The max amount of money they can make on a loan for for VA assumption is $300 per the VA guidelines. So remember, banks aren't really in the business of making money on assumptions, and so there's really no incentive to process them quickly. So they may have a couple processors, a couple underwriters doing this, but they may have thousands of applications. So you can imagine if it takes, a standard loan where you have an incentive for that lender to process, it could take 2-3 weeks to go through underwriting. With an assumption with minimal manpower and a backlog, it may take 2 or 3 months for that to go through the servicer's underwriting timeline, and that's where the delay is. It's really tied to the lender processing them up
Got it.
until now, and that's why the VA has issued this guidance directing those lenders. They have to do it faster, or they run the risk of being fined, the guarantee being zeroed out, et cetera, et cetera. There's a lot of teeth behind that to force the lenders to process them more quickly.
So what have you seen in regards to the loan? Because I want to get clarity for those people listening in on how this works. So you're going in, you're assuming the old loan at the rate that they've got. Let's say it's 3%, right? You've got that amount. Now there's a difference. Where do you go out and get this loan? And is it at the going rate or is it a lower rate? Because it's a full-on loan. How does that work?
You're talking about getting a loan for the difference
For the
between
difference.
balance and sales price, right, Tristan?
You
Yeah.
got it.
Yeah. So we do have a vendor that we often work with for getting a loan for that delta. So let me just back up really quick. So let's say the home is for sale at 750 and the current loan balance is 650. So that difference is really what the buyer is going to provide at closing, so that they're assuming the full loan balance of 650, but they've paid for the full price of the home at 750. A lot of buyers that we've encountered have pretty decent savings, and rather than getting a second mortgage, they opt to just pay the difference in cash at settlement. So that's actually one way to do it. You don't necessarily need to get a loan for that. If you have a large chunk of money that you were thinking about using as a down payment anyway, it might just be an option. And certainly the more efficient option would be to just pay that difference in cash at closing. In terms of getting a loan, it does depend on the servicer you're working with as to whether or not that's even a likelihood. So the servicer that owns that loan, some of them will allow a second mortgage to be taken out to cover that difference. Others won't. And so what we generally recommend is, once you find a home that your buyer wants to put an offer in on, of course, if you're using AssumeList, you're going to know the monthly payment, interest rate, loan balance, but you're not going to know where the servicer is. You're going to need to talk to the seller, find out who the servicer is, and call them before you put the offer in. 2 questions to ask. The first is, hey, how long are you taking to process assumable loans right now? And obviously, if it's a VA loan and they say 90 days, you might just want to hand them a copy of the VA circular and be like, are you sure about that? And then the second one is, hey, will you allow a second mortgage for us to cover the difference between the down payment and the loan balance and the sales price? You do still have to at least put 5% of your own money down. There's no way to do 100% loan on the entire sales price of the home. So you do need to plan on at least 5% cash. If you don't have that, it won't be a good option for you. But talking to that servicer in advance can really give you a good planning factor, both for them setting expectations for timeline and for understanding whether or not they'll allow that second mortgage. Or if they won't, of course, cash is going to be your only option.
Okay. And then with that, is it different with an FHA, VA, and USDA? Are there big differences, or is it pretty much the same across the line?
Yeah, it's going to be very similar across the board, Tristan. The nuance with VA, and I sense there's probably questions out there. So generally speaking, anybody who's familiar with VA loans, you have to be a veteran or have VA eligibility to apply for a new VA mortgage. You don't have to be a veteran, and you don't have to necessarily have entitlement to assume a VA mortgage. So theoretically, any borrower, any buyer, home buyer, can assume a loan with a VA mortgage if and only if the seller is willing to leave their entitlement with the property. So you could do very easily if the new buyer has their own VA entitlement, you can just do what's called a substitution of entitlement. Seller's entitlement's released, the new buyer replaces it with their entitlement. With any VA loan, somebody's entitlement has to stay with that property for that loan to stay in effect. So a buyer could buy it without being any association to the military and still buy and assume a home with the VA Assumable loan, as long as the seller is willing to leave their entitlement. And we find, having done many of these, at least in Northern Virginia, DC market where we are, we find about 50% of sellers are willing to leave their entitlement in place and 50% want it to use it for future use. And that just has to do with the individual homeowner's, personal circumstances, et cetera. So maybe they have enough equity where they're going to sell the home and use that cash to buy a home someplace else. Maybe they're retiring and they already own another property they're going to move into, so they don't need their entitlement again. Maybe they're going to move in with families. So everyone's circumstances are different, but not every seller necessarily needs their entitlement reinstated. So that frees up the available pool of potential buyers to buy it. And then in terms of eligibility, so to qualify for an assumption loan is really no different than qualifying for whatever the regular guidelines are for any VA line. So one of the benefits of a VA loan in particular is, and certainly with FHA, as we all know, FHA, the guidelines, the qualifications are fairly lenient compared to, say, a conventional mortgage. So debt to income ratios, credit scores. So for an assumption, the same guidelines for that government loan just have to be met. So I don't know if there's a specific credit score, FICO score needed for a VA or an FHA, but it's generally much lower to qualify than it would be for a conventional because they're government-backed loans. So really, from the standpoint of eligibility, if you can qualify for a regular loan, you will, by default, generally speaking, also be eligible and qualify for an assumption or whether it's VA or an FHA or USDA for that matter. So the eligibility criteria in terms of credit qualifications is really no different than somebody who would already be pre-qualified or pre-approved to go take out a new loan. If they meet their lender's guidelines for a new mortgage, generally speaking, they'll also meet the same guidelines and requirements to assume a loan. And usually the assumption process is actually easier to qualify for because there's much more lenient credit approval requirements for VA and FHA.
And the assumption, when you assume a loan, it's the exact same rate, right? We had that question multiple times.
The exact same terms, the exact same mortgage payment. All they do, the lender just changes the name of the borrower from seller to the new buyer, and the terms of that loan are exactly the same. Also, another cool little feature is, let's just say that homeowner had they've owned the home for 4 years and they made 4 years of payments. That buyer is now buying a home with not a 30-year mortgage. They're buying the home with a 26-year mortgage. So they get the lower interest rate.
That's a big win, man.
Yeah, lower interest rate, shorter loan payoff because they're, in this case, this example, they only have a 26-year mortgage.
Wow.
They have lower closing costs. So because there's no lender's title insurance that's already in place. So there's a reduced closing cost. So there's a lot of benefits from a buyer standpoint to pursue an assumable loan.
That's pretty big.
Yeah.
That's pretty big. Mike, Bethany, the big question is, now that we're learning more about this, and some people are learning for the first time, where do we find them? How do we find them? How do we take advantage of this?
We're here for you.
Yeah.
My wife just texted me. She's watching. My wife texted me. She goes, "Why didn't we do this?" I'm like, hold on, let's find out where to get this.
You can still do it. Well, that's where we have you guys covered. So traditionally, and this is part of the reason we started our company, AssumeList, is it is very difficult to find them. So one of the tricks we would always try would be to, search the MLS remarks for particular phrases. We would look for assumable, assume, veteran, just to see what was out there that people were advertising with VA loans, for example, or FHA loans. Okay. And what we eventually figured out once we had AssumeList up and running is that number of homes where people are advertising the fact that loans are assumable, that represents probably only about 10% of the total number of assumable loans out there on the market.
Wow.
Either because the listing agent doesn't know they're assumable, The seller doesn't know they're assumable, possibly. Nobody thought to mention it as a marketing feature. And the bottom line is it drives more buyers to your property. If
Yeah.
you have a seller with an assumable loan in that property, regardless of whether or not they think that will be the option they select, they don't have to make that decision today. The only decisions you're trying to make now, if you're marketing their home, is how do we get the most number of buyers to this property? And advertising this feature is a way to do that. And ultimately, that may be your best buyer. So you don't want to rule them out before you've gotten down that path. So all of that's to say, it was very difficult to find them, and it's a small fraction of homes available with assumable loans are actually advertised like that. We also tried checking property records, and those were sort of hit or miss. And even if we could find out they had an assumable loan, we couldn't find the loan balance or the interest rates, and we didn't know if that home was going to make sense for our clients. And so that's why we started AssumeList, which is a one-stop shop for people to be able to find homes with assumable loans and also view mortgage balance, monthly payment, interest rate to make sure those are valid options for their people. Both home buyers and agents can subscribe, but we'll talk specifically about the agent side, since that's that's who we're talking to now. We also have specific features that are geared towards agents. I'm going to let Mike talk about those.
Yes. So the bottom line, though, Tristan, is that as Bethany mentioned, only about 10% of homes that have assumable mortgages are advertised as such on the MLS in any given market. So it's it's difficult to find these properties, and so that's was the kind of the genesis behind AssumeList to begin with, is making it an easy place for agents and home buyers to search for these properties. One thing that we do different that some of the other companies out there that are discuss or advertise that they can help home buyers buy homes with assumable mortgages is we are the only platform that allows agents, and this is exclusive to agents, licensed agents, to search for any off-market property that has an assumable mortgage. So if you are an agent and you got a buyer that wants to live in a specific neighborhood or a specific school zone or zip code, and there's nothing for sale in that community right now, you can prospect market that community and pull up any home off-market, non-listed, and you can see all those interest rates. You can see when they purchased it. You can see what the loan balance is in, and then we actually just recently added a skip tracing feature where we are allowing allowing agents to actually pull up cell phone numbers and email addresses of those homeowners. Theoretically, if you have a prospective buyer who wants to put an offer in, you can have a conversation directly with those homeowners of unlisted properties in specific neighborhoods that you can search for, regardless of whether they're already listed on the market. So that's a really cool feature that we are allowing exclusive to agents, the ability to identify properties off market to enable them just one additional way to find those homes for their clients.
So if I'm looking at this right here, but this is your website. Everyone, this is a website. We put it up in the chat, but you find on and off market properties, right? The off market ones, I'm assuming we can mail to and do whatever we want with them. Those
Correct.
are great. We view the interest rates and the loan balances, the prospect marketing tool, and the skip tracing. What is this? Is that what this is right here, or are we finding the assumable loans on this map?
So that just identifies, we plug in a Google Maps. So whenever you search based on location, it will plot those properties on a map which have assumable mortgages. So it will filter out those properties based on the location that the agent is searching for and then display them on a map.
Got it.
So we make it as user-friendly as possible. So anybody who's familiar with any, web search platform, an IDX type website effectively operates just like that. And there's a couple of additional features we're adding in this week, one of which will be the cash gap. So we talked about what's the difference between the loan balance and the sales price. So a lot of buyers, maybe they don't have 300,000 cash to cover that difference. So we're going to allow a feature that we can search for properties based on that delta. So if they only have 50,000 or 75,000 available, they can search for properties that only require that cash difference between that sales price and that loan balance. So we're going to and make that a filterable criteria. The other thing is, here's a cool little piece of information. The listing agent doesn't have to include or check any boxes or make any mention of whether their home has an assumable mortgage. That is done by default. As soon as a property is listed in the MLS, it is already in our database. We already know which properties have assumable mortgages, which is why we enable off-market searches, because we already know all those properties. And every property on AssumeList has an interest rate of below 5%. So just because it has an assumable loan, somebody could have bought a home 3 months ago with an assumable loan. We're not going to display that as here's an assumable loan opportunity, because it may have a 6.5% rate, which is no one's going to waste their time on assuming that. So
Yeah,
we only want to show homes that have really a viable assumable loan. So sub 5%. So every property is sub 5%. And any home that's listed on the MLS, regardless of whether the listing agent includes any comments or not, will be searchable and displayed, because we have a direct connection to the MLSs in which we serve, and the list of communities and the states in which we provide service to can be found on our website. If you go to assumelist.com/area served, or just go to the homepage, on the very top of the homepage, there's a button that says area served. And that's where anybody can view our current markets that we serve, which is, generally speaking, right now, the Mid-Atlantic region, really southern New Jersey, Delaware, Eastern Pennsylvania, all of Maryland, DC, Northern Virginia, and to include Central Florida. We're in Central Florida as well. We're very quickly expanding out to the West Coast. So within the next 2 weeks or so, we'll be operational in Southern California. We're all the way from Monterey, LA, all the way down to San Diego.
wow.
And that'll be live within the next 2 weeks. We just got all of our licenses
Dude,
and our
that's a
credentials.
big VA area.
Huge. Yep. And then we're moving very quickly into the Phoenix, Arizona, kind of Maricopa, Pinal County, and then into Texas, Georgia, Colorado, North Carolina. Our goal is to be, within the next probably 3 to 6 months, we want to be in about 90% of all the major markets where assumable homes exist nationwide. We'll be in those markets, and then we'll kind of fill in the gaps along the way. So there's some areas up in the Northeast and the Midwest, which we want to get to. It will take some time to get there, just because MLS access is not easy. And that's kind of the benefit of, I think, what we offer, where a lot of other folks that try to do this, it's kind of difficult. Anybody can get a list of properties that have assumable mortgages, but to know when they're listed for sale and all the details behind them and marrying that up is kind of where we really think we bring a lot of value. And then, of course, being able to search for off-market properties, we're the only ones able to do that.
I like that. So I've got a couple of ideas here on our next session. One is, if I'm going to use this more, I'd like to know how to market to the sellers, right? To the possible sellers. So I'd love to understand how that marketing looks, because you've been doing this and you have way more experience than I do. I'd love to jump into this. So I'd love to touch on that, right? Like, hey, these are the options. This is what we're seeing works. And then as another separate talk, I'd love to also dive deeper into maybe the back end of AssumeList, so that I can fully understand what the skip tracing looks like, how the properties show up, what I need to be looking for, those types of things. Is that good?
That's
Absolutely.
great. Yeah, I'd love to do a live demo. We can demo it on our next webinar session, and go into as much detail about how the data works and how we serve that up. And yeah, absolutely happy to do it. And by then we'll have more markets available, and we can talk about where we're now growing to. And of course, I guess we'll kind of close out with this. Lab Coat Agents are the only vendor, or the only organization nationwide where we offer a 15% discount for any subscriber. So to Lab Coat Agent groups, we don't typically discount much. I think veterans, we offer 10%, so it's an excess of even veteran discount, exclusive to the Lab Coat Agent kind of membership. So that's our kind of offering to the group here, the followers, that we really want to try to partner and support the agents within this community. We really feel that we can contribute to home buyers by equipping and empowering agents to service and serve those home buyers, and giving them tools to really differentiate themselves with their marketing. What we find is everybody wants an interest rate below 5%, whether it's a 2.5% or 3% mortgage. Everybody wants one. And so the agents that can differentiate themselves and say, hey, I've got access to tools that I can help you, Mr. Homebuyer, Mrs. Homebuyer, with finding those properties. Whether or not those buyers actually go through the process and complete an assumption is not really the point. The point is that you've just converted a lead into a client by offering a capability, a tool, a service that other agents are not able to provide. And that is the power of this. In fact, Bethany and I both are picking up clients left and right by just simply having a conversation with these sideline buyers who really aren't aware that this exists. And frankly, about 80% of home buyers who think they're going to go into a home purchase and assume a loan usually end up just buying a home just through a traditional sale. Through one reason or another, their timeline, maybe their cash amount isn't sufficient. And so, but the point is that we've been able to convert them into buyers, and we're doing more transactions with more production because we're able to have this conversation and we're able to offer this as a service. And through that marketing technique, we think there's a lot of value here for agents to be able to showcase this as, again, as a way to differentiate themselves from the competitors in helping buyers come off the sidelines and lure them into providing a service to help them in their purchase. And like I said, most buyers actually don't go through the assumption process, but still want to buy a home. And if you can get them talking about it and working through with them and showing value, we think this is a really good tool to help improve agent production.
I love that. That then brings up more questions, which how do people get a hold of you directly if they just have questions, right?
Easy.
Is it an email or phone number? What's best?
They could go around the website. There's a form right on the homepage. They click on the help center at the bottom of the website. There's a link and they can submit a ticket and it goes directly to us. We respond personally, at least for the time being. And then we certainly are more than happy to help agents with questions. And you know, as questions come up, we will field them as best as we can.
Perfect. All right. If you have questions, go there, fill it out. They'll get back to you. I know we've got a few questions here and inside of the group. So Mike, Bethany, thank you. I'm excited to do the next one. So you decide, is it going to be how to market to them, or let's look at the back end and the details, or maybe a combo of both. I don't know.
Cover both.
Could be both.
But I like that. Thank you,
Awesome.
Bethany. Thank you, Mike.
Tristan. Appreciate you. Have a good
Bye,
day.
everyone.